My name is John Poley. I'm your host of the Bureau Briefings. Each month, we bring you content that has been requested from customers and inquiries from the previous month. After each webinar, our live attendees get a link to the full recording and a brief survey that actually helps us quite a bit at the United States Gold Bureau because you're helping us choose the future topics. Today's topic is why tangible assets matter. My special guest today is Joshua Hoy. He's the product manager at the United States Gold Bureau.
Yep, thanks again for having me. Like you said, I'm one of our product managers, but you're actually our company's client experience manager. So, why don't you tell us a little bit about what you do and what you did before joining the U.S. Gold Bureau?
Well, this is a great job at the United States Gold Bureau. From the time a new visitor comes to our website, they make a first purchase, they go on, they make a second purchase, they start a precious metals IRA. They become a raving fan for the United States Gold Bureau and refer family and friends. My job is to improve every interaction with our clients. Before joining the team up here, I was a real estate agent for 25 years. Around the time inflation hit 9.1%, remember how painful that was?
Definitely.
I felt that the Austin real estate market wasn't where I should put all my efforts. The United States Gold Bureau hired me at the perfect time. When inflation is high, as you know, gold does very well. Real estate, not so much. So let's talk about some gold, Josh. Since you've been here for a while, could you tell us about the United States Gold Bureau?
Yeah, definitely. So U.S. Gold Bureau is the largest authorized numismatic bulk purchaser of U.S. mint products in the country, and we work with some of the more reputable refineries and mints across the globe. As such, we can guarantee the origin, authenticity, purity, and quality of every product that we offer. We're an authorized dealer for NGC and PCGS, and through the United States Gold Bureau's parent company, Lone Star Tangible Assets was awarded full state compliance and oversight on the Texas Bullion Depository, also known as TXBD. The Texas Bullion Depository is the only state-administered precious metals storage facility in the country, and since 2003, the U.S. Gold Bureau has been able to do over $2 billion worth of transactions.
With the Olympics going on, I'm going to have to say that is a great track record.
Well, we've done really well. We've helped a lot of people.
We have a financial disclaimer on the screen, and I'd like to take just a moment to talk about today's format. Why tangible assets matter. You'll have Joshua and I here for the next 15 minutes. We're going to cover a lot of content. As part of our live audience, you get to ask questions on this Zoom webinar. With hundreds of registrations for this webinar, and only the two of us, we're not going to be able to answer every one of those questions live. But we will be handing those questions off to our precious metal specialist at the conclusion of today's webinar. Before we get started, I just want to be clear. We are not tax professionals. We recommend that you seek the advice of a tax professional for any tax-related questions. Now, like I mentioned, today's main topic is why tangible assets matter. Joshua, could you start with an explanation of tangible assets versus intangible assets?
Yeah. So tangible assets are going to be physical items of value that you can touch and see. They include things like real estate, precious metals, gold and silver, and art. And these assets can provide stability and security in an investment portfolio, especially in uncertain economic times.
Often referred to as a safe haven asset, what is it about tangible assets like precious metals that make them stable during uncertain times?
So tangible assets provide stability during uncertain economic times because they have intrinsic value and are less susceptible to the volatility that can affect financial markets. And so unlike stocks or bonds, which can be influenced by market sentiment, economic policies, or corporate performance, tangible assets like precious metals maintain value due to their physical properties and historical significance. Now, they act as a hedge against inflation and currency devaluation, offering a reliable store of value and preserving wealth when other investments might be declining.
That all sounds correct, but in today's digital world, aren't digital assets the way to go?
Well, maybe. No one knows 100% for sure what the best bet is. That's why we talk about diversification and having an age-appropriate allocation into any asset of your portfolio.
Age-appropriate allocation, could you go a little bit further into that?
Yeah, so, traditionally the later stage you are in life, the more conservative you are with your investable income. Now, we recently saw a lot of volatility in digital markets. So if you are in the latter point of life and don't really have much tolerance for risk, tangible assets may serve your needs better than digital assets. Owning physical, tangible assets offers several benefits. Now, precious metals, for instance, have been valued for centuries due to their rarity, utility, providing a sense of permanence and stability. This permanent presence can offer peace of mind as they aren't subject to the vulnerabilities of digital assets such as hacking or cyber attacks.
Joshua, can't I just put money in the bank? I know at that point it's not tangible, but at least slightly safer than my mattress at home.
It's definitely a little bit safer. The bank is definitely more safe than keeping money in your mattress, but inflation affects your cash no matter its location. Now, the national average interest rate for savings accounts in the US is less than 0.5%. Plus, there are occasional fees at financial institutions. Tangible assets, such as gold and silver, often maintain or increase their value over time, especially during inflationary periods, while the purchasing power of money in the bank or a mattress can erode due to inflation.
We have to have some cash for everyday life. So with my investable income, what are some key differences between physical and digital assets in terms of risk and stability?
Well, John, you actually touched on it earlier. So in today's digital world, technology is one of the biggest risks to stability in a portfolio that drives the transfer of wealth into physical assets. Investing in digital assets allows exposure to the growth of new financial ecosystems like blockchain and decentralized finance, but also allows exposure to cybersecurity threats, regulatory changes, technical failures, and of course, user error. Physical assets like precious metals have a value that is recognized globally.
I don't think I've ever heard of anybody hacking gold or silver, but isn't there risk with counterfeit precious metals?
So there's risks with any investment. Cars can be lemons, financial records can be doctored, and investment properties can have mold. When it comes to counterfeit precious metals, you can best avoid this by purchasing from a reputable authorized precious metals distributor or by purchasing your very own metals testing kit.
I can tell you mold can be one of the worst things to find in an investment property.
Well, you said you worked in real estate prior to the Gold Bureau, so what's it like nowadays if you were trying to sell a house?
Good question. In our area, Austin, Texas, lots of volatility and from market saturation, but flipping or selling real estate has really become more time consuming. When you add those factors in with potentially high transaction costs, having a healthy amount of liquidable assets can be very beneficial.
I 100% agree. And having assets that you can liquidate easily could prevent you from taking unnecessary losses due to early withdrawals, early liquidations, and if I'm being honest, the overall peace of mind that I don't have to look over my shoulder is pretty great. And aside from the security risks associated with digital assets, there are also a lot of ways to hold or manipulate the cost of selling. So high transaction volume can congest networks, resulting in delayed transaction fees, and there are exchanges that impose withdrawal limits that can restrict your ability to liquidate when you want, and you're often relying on a third-party custodian, and mismanagement or fraud can happen.
The third-party custodian's job is to manage the designated portfolio, but who holds them accountable?
That's kind of the money question. There are several entities and mechanisms that hold custodians accountable. There is the SEC, internal and external audits, and as a client, keeping an eye on how your wealth is performing. Before investing with a third-party custodian, make sure to do your research. Not only do you need to factor in fees, but also the time commitment to learn the markets your wealth is invested in.
I used to bump elbows with a few smart real estate investors over the last couple decades. Everyone that I saw as successful had rental properties or passive income that would act as a counterbalance for their more exclusive luxury properties. Oftentimes, these people would have to hire a property management company that could handle all the day-to-day technical aspects while those investors were able to look for more opportunities.
Well, and that's kind of the dream. Being able to use your time to look for investment opportunities while your existing investments are continuing to benefit your financial portfolio. Now, real estate can be a tough market to start out in, but when you have an age-appropriate balance of liquidable assets and long-term assets, you have the freedom to decide where you want your money instead of being stonewalled by potential regulatory hurdles or, as we experienced recently, a complete lack of accessibility. Many financial websites went down on July 19th, and John, you mentioned that was quite a memory for you.
It was when the market opened on July 19th. I had a couple of stock trades, early morning pre-trade that I wanted to do before I come into my job at the United States Gold Bureau. When I set up the trades in my Charles Schwab account, I clicked the button to activate the trades, and I got an error message. The trades didn't happen. And it wasn't just Charles Schwab that day. It was everything you see on the screen here had some sort of outage that day.
Yeah, it was kind of crazy. It's important to remember now that was a blip. So you're talking about a few hours. What would you do if this was for a week or a month? Now, to be clear, that's a worst case scenario. But that is exactly what we should prepare for, right? What percentage of your portfolio would you actually have access to if this was to happen again?
How does the market stay stable for tangible assets if there's a lack of accessibility to it?
Well, I would say it's stable. It might surprise you that tangible assets and intangible assets have a common factor that's where the value is influenced by supply and demand. Economics 101. If we look specifically at gold and silver, bullion is traded all over the world. And right now, gold is at one of the highest prices in history. You also have central banks all over purchasing gold in record amounts. When central banks lose faith in fiat currencies, they'll gravitate towards safe haven assets. Basically, central banks are saying they believe in gold over a fiat currency.
Real estate has some similarities as well. In markets where properties or land are scarce, you might have to pay a little more than the market value in order to take ownership.
Well, John, let me ask you this. What would happen, if I took your house, got a helicopter and just lifted it up and just set it down right on the Pacific coastline? Do you think you'd be able to get a little bit more money?
A little more? I think you just tripled the value of my house. But please don't take me out of Texas.
Don't worry. I'm sure we all prefer you closer to your office.
I know I am.
But this is a great representation of different values in the same asset class. Waterfront land or property will traditionally cost more than landlocked property. There's less land to go around. And, like we discussed in bullion versus investment grade, there are less coins that achieve a perfect Proof 70 or MS 70 than there are minted. There are less of these coins to go around, and just like waterfront property, the value is generally more stable and less volatile.
Wow, so landlocked property is kind of like bullion, and investment grade is more like the waterfront property.
Exactly.
Now, I'm sure you can't exactly answer this, but when would you say is the right time to sell?
Well, that all depends on a person's individual goals. Now, when I think about my metals and when I might sell them will depend on when I need to. My metals are my last resort. And as we've mentioned, precious metals have maintained a value, pretty much since they were discovered. The first stock market began in 1611, a little over 400 years ago. Now, the first gold coins were created around 700 BC, over 2,000 years before the first stock market.
At the United States Gold Bureau, do we have any of those coins?
Well, I'm not sure if we have any coins that are that old, but we do have a large variety of pre-33 and ancient coins that all have some interesting stories.
And please tell me, are those coins eligible for the U.S. Gold Bureau buyback program?
Yes, they are. And as always, if you do business with us, we will do business with you. Bullion will be liquidated at the current market value. And if investment grade has been held for 5 years or more, we recommend taking advantage of our consignment program, but you always have the option to take an immediate bid price if it's an emergency.
You've heard me say it here once, twice, 3 times. It is the best buyback in the industry. And I'd like to point out at the usgoldbureau.com, we have more information on this exclusive program for our clients. Today, we have learned a lot, haven't we? We've learned the benefit of tangible assets like gold and silver when it comes to diversity in a portfolio, the ease of liquidity, and the low level of maintenance. 24 hours after this live webinar, we will send you an email with a link to the recording and our past webinars that we referenced today. If you have a pen handy, you can write down this number, 1-800-775-3504. To speak with one of our precious metal specialists. Again, that phone number is 1-800-775-3504. If you did ask a question on the webinar today, we will be sure to get that over to one of our precious metal specialists to reach out to you promptly during business hours. Joshua, thank you again for being here covering why tangible assets matter.
I'm happy to be here. Thank you.
And thank you. It's so exciting to see this growing audience each month.
We appreciate y'all.
Thank y'all.